Good afternoon, everyone. It's 3:05 here in the UK on Friday, the 9th of October. So we're into the US session, 35 minutes. All is good. As you can see, the S&P 500's up 17 points, and the advances twice that of the declines, and lots of green on the front page of VectorVest. And you can probably see that the longest term measure of the trend, known as a confirmed up, in fact turned after the close last night. So all of the measures of the trend on VectorVest are positive. So if I have a look at the VectorVest market timing graph, I think I've got it up. That's it. And I put on the longest term measure of the trend, which are these confirmed calls, and you can see that was the confirmed call up in May, and down on the 11th of September, and then up again last night. I think the very interesting thing is the divergence that I see in this chart. I mentioned this in the last video. Prices are rising here, but the MTI is falling, and it's just come up through one, and that reverse divergence, or some people call it a slingshot, is in fact a strong predictor of an explosive move, and that's certainly what we're seeing. I've always felt that there's a high probability, and remember, it is a probability of a strong move into the American elections, and that technical evidence adds a little bit of weight to that. Nevertheless, we shall in fact trade the market and not my forecast. So if I go back to the front page of VectorVest, as I say, a very, very positive day, and as you can see, a little black star and that green light saying that the price is up day over day and week over week, and that the momentum of the trend is increasing. The trend has got its foot on the petrol. If I go to viewers, that's the shares that I'm holding. I haven't added, that's not true. I bought LVGO a day ago, a couple of days ago. I seem to have lost track, and I haven't added a great deal to that. I'm very pleased with this little share called Rock. Let's just have a quick look at these, and if I chart them, that's Rock, and it's a classic VectorVest share, folks. It's just a bit of a no-brainer, in fact, when I saw it. That's the VectorVest valuation, so it's significantly undervalued, and that's earnings per share growing strongly from the bottom left to the top right, even over the last 3 months odd. That is what I referred to as a spring, not a classic spring because there's no shoulder there, those of you that have done my work, but it broke here. I couldn't resist it. Just remember, the trend was down here. The first measure of the trend on VectorVest is called the primary wave, and it turned up on the 28th of September, and that was good enough for me when I saw all of this, and I bought in here at about 65. A couple of days as it come back to kiss. They always come back to kiss, and then moving up very strongly, as is my way with a leverage position. When I've made as much as I've risked, I take off half, get the stop to entry, and then do my best to let the second half run. That's what I'm doing at the moment in this share. The VectorVest valuation is 96. All right, so that one looks good. AMD has come off a little bit, and again, my stop's at entry on this. Don't want to give that back, but what can I do? Let's see how we go here. Centene, similar situation, come off a little bit today. The whole market looks a little bit overbought, so I wouldn't be at all surprised to see a bit of a pullback before we go again. And Target going nicely from this textbook cup and handle. I'm doing a course in technical analysis in the next few weeks based on short-term trading of both UK and US shares, and I've got Target in the course notes as a great example of a textbook cup and handle pattern. Many people these days are using cup and handle examples that look quite agricultural to me, but that's a pretty perfect example of one. So that's going well, moving up to new highs today. Apple has done nothing. I'm sitting there, might be up a tick or two, nothing worth. I bought this the other day, LVGO. It needs to perform. There's a huge trend in this share over the last while. Look at that, and I felt that there's a high probability that this can actually be repeated. That hasn't happened as yet. I think that in both the UK and the USA, one of the most exciting prospects now is gold, and I have a position in the GDX, which in fact mirrors the bullion price, and I have this position from this candle pattern here, or bar chart pattern. It's called a gap and snap. I think the candle people call it a piercing line. Now on the bullion market, this high is 1922, and I felt that if the bullion market closes above 1922, that would confirm that there is a low here, and I think if we see the GDX closing above that high tonight, that will be a good confirmation that there's a high probability move ahead in gold. I think that in the UK you could have a look at Polymetal, you could have a look at Caledonian, you could have a look at TSG, you could have a look at Pan-African Resources, and I did a video on those a couple of days ago. Okay, so gold looks like a very exciting prospect to me for those people that have got the stomach to trade it. Not everybody has. As I keep reminding you, a moment of weakness in the gold market and you're dead. Okay, so just remember that. Let's look at VectorVest UK, and VectorVest UK looking better than it's looked in many a long day. In the sell-off, we didn't get a confirmed down, and so the confirmed call was in place the whole way through. We've got lots of green, and we've got a black star again in the green, saying that the trend is up and momentum is rising, and the little pointer of course is saying that it's safe to buy undervalued stocks that are rising in price at this time. I think that's the VectorVest composite of the UK, and again we've got this divergence. See, this is rising, that's falling, and the MTI is moving up through 1, and that's a very strong technical signal that we could actually, after all this time, push towards the February highs in the London market. So that's quite a positive place to be. I have bought one share in the UK market. I haven't been as aggressive in the UK market as I probably should be, but reasonably well filled here, and certainly if the bullion market does add close above that 1922 level, then I shall be adding a couple of gold shares into that as well. Clearly plus 500, there was some news about a microsecond after I bought it about their ability, I believe, to trade in cryptocurrencies, where they make a great deal of loot, and the market sold off after that. So I bought into CCL a couple of days ago when I saw some green there, and the chart looks quite good to me in that there's the value, so it's undervalued, and it's trading here in this ascending triangular pattern, maybe easier to see in this chart. It looks to me as if it wants to break through on that, and as you can see in these big run-ups, we got nice pushes up in volume here. As it's tried to push up here, we've got a nice push in volume. So I think that this share is being accumulated. You can see the earnings per share is moving up quite nicely. Maybe a little bit late in the day, I know, but if you have a look at it, it is a worry-free share. RV 1.33 and RS of 1.41. So CI is very strong indeed. So that's what I'm holding. Plus 500 hasn't broken. It's another example of a cup and handle pattern. It hasn't broken, but I'm reasonably pleased with the rest. I got an email a few minutes ago to tell me that Games Workshop had broken above 104 again today. So reasonably pleased with them all. If I resort those by RT, it takes the top performing stocks trend wise to the top of the pile, and the worst ones to the bottom of the pile. Crunswick, I'm hoping, is building a base around the £36 level for another advance. and there was a very good candle print on Cranswick a few days ago. Hilton Foods is disappointing me. It had 5 or 6 really good days, and then it gave a great deal of it back again. Halma is just the most outstanding little company, a big company should I say, and it has in fact thrown, very few UK shares have, but it's broken well above the February high, consolidated, and this resistance became support for a very long time, and with the general market now it's pushing up very strongly. So this is a very strong leader in the UK market, and this flag type pattern, like so, something like this bit should be repeated, and that would be 17 to 23, and that would take us to 27, 28 here. So that would be very nice indeed. Halma's been very kind to me over the years. Avon is hanging in there, and the GB Group had a nice run the other day, so I'm reasonably pleased. Certainly the American market, they haven't performed, but our worry-free portfolio is up, I think, 25 or 26% since the confirmed up on the 24th of April, and the portfolio that I'm holding is up a little bit more than that, because if you remember, I bought in with the DEW market timing system, which in fact got us in about a fortnight before the confirmed call, and that fortnight the market was rising strongly off the low. So I'm reasonably happy with that. I look forward to seeing you all on Monday afternoon at 1:30. And on Monday afternoon we have Susan Thornborough, who runs the London user group, and she's going to come along and tell us how she actually simply and easily and robustly picks shares. So I'm really looking forward to that. She does it in such a wonderful way, simply, and Susan has got a great track record of being an investor, and she's been using VectorVest much longer than I have, in that she was using it in Australia before she actually came back to the UK some years back. So that's going to be a great afternoon on Monday afternoon, 1:30 till 2:30. Just remember, let's have a look at the American market before we go again. Home. And we're up 15-16 ticks, so it's still hanging in there at 3462. Nothing has changed here. Just remember that the market, to me, looks a little bit overbought in the short term, and sooner or later we need a 2 to 3 day pullback before it goes again. Let's trade the market, not the forecast. All is good. Let's enjoy the ride. Thanks very much. Bye bye.